What's going on, everybody? I hope everybody's having a great and fantastic day today. We're going to be talking about moving average lines, kind of what they are, the ones that I use, why I use them, and why I think every professional or intermediate or beginner or every trader should use these lines, guys. So, we have ticker symbol AAPL, also known as the Big Apple. We all know Apple, but so we pulled up their stock chart here, and you can easily look at it, guys, and say, okay, it has some strong support at 168, some resistance up at here at 170, 171. And some more resistance up at 175. You can look at this stock here and you can look at everything, but you can also see this stock really loves moving average lines. You can tell that it loves to hug this 200, and pretty much, it loves to use these lines as support or resistant points, and that's exactly what you look for. On the 10-day 30-minute chart, it's not as clean, but guys, as you get into the yearly and daily chart, this looks very, 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 very easy to understand here. That's even make it go farther back. Let's go 3 years on the weekly chart here, guys. On the weekly chart. So, looking at this stock, you can see, okay, it did bounce off or near this 200 moving average line. So, pretty much, let's get into what these lines are. We have 4 lines. We have the 200, the 90, 20, and 9 moving average. Pretty much what they mean, guys, is the past 9 days, they merge and average all of the past closing prices of the stock, and then it forms this line, and this line just pretty much acts as a support or resistant point. That's pretty much what all of these mean. So the 9 is probably the weakest one on here. Then there's the 20, which is stronger than the 9. Then there's the 90, which is stronger than the top, and then the 200, which is pretty much one of the strongest support or resistant points pretty much on the map. So looking at this, you can say, okay, here, let's bring it back a little more. You can say, okay, it did break through here and then got really bought back up, kind of bounced here and continued to rally up on these moving average lines. It broke through the 20 and then used the 9 as some sort of support to continue to rally, fell back down. The 20 moving average line carried it up, pushed it up, fell. You can really just say, okay, but as it gets up in here where it gets choppy, this is where it gets a little nerve-wracking. I like to make my trades and make them be above these lines, because now when I'm looking at this stock and it's above all 4 of these points, I know, okay, there's not as much resistance up ahead if this stock continues to move. So looking at it, as it broke through here, it tapped here for a while, and then right when it broke through here, it's above all 4, and then it continued to rally up. So you can really just look at these trades that you could have possibly made. So it's in between here, it breaks above here, continues to rally up, falls, breaks through this, continues to rally up, and then falls back down. But yeah, so pretty much what these mean, guys, is they act as a support or resistant points, because these are indicators that traders, investors, and just a lot of people use on a daily basis to make quality trades. And as you guys can see, if you guys want to see, well, Carter, how strong is the 200? Okay, looking at this here, it did break through, but this, you could consider this a bounce all day on it. Okay, And then boom, we have this huge selling pressure, huge, breaking through all of these uh, you know support lines, breaking through with ease. Boom, hits this like a wall, guys. Hits this 200 like a wall and bounces. And that's what we're in now. We're in this bouncing territory. So now it bounced through here. Congrats to all the traders and swing traders like myself that caught this move down here, guys. This was an easy move. Buy the dip, sell the rip. And yes, it's risky, but what's the risk? Look at the past history, because if you guys know anything about stocks, history tends to repeat itself. So if we're looking at this saying, okay, well, it has a very hard time breaking this, let's go long here, set our stops, maybe below the first red candle. So maybe let's hop in at the 200 at 49. 49, what would that be? 49 flat almost. And then let's continue to set our stops below here. So stop setting here. Whoops, it's not. So anyways, our stop set right in there. And then let's just continue to ride the trend, guys. Let's just continue to push up. And yes, you might be saying, well, Carter, isn't it, if it has this downward trend, why would you hop in all the way down here when it can continue to fall? Well, I'm using these indicators to help guide me in that direction. So you can, go to studies up here, and you can go to add study, and then you could really just get an overall good idea of the overall strength of the stock. Just type in RSI, relative strength index, RSI. Let's add this to the chart here. Boom. Oh, it already added. Let's get rid of one. Boom. Okay. Wait for that to load in. So now looking at this, well, look how weak the stock was in this territory. It was bound for a bounce. As you guys can see, it was overextended in here. It's overextended in here, and now this sell-off was coming. And now it bounced, and that's what we're in. So this is the RSI. This is another indicator that you can use to make trades. And yeah, I don't really use the RSI as much for daily charts. I use it more for my swing trades, because you want to be in a good state, because you never really want to buy up here. You always want to buy down here, sell up here. That's the overall goal. But yeah, the reason why I hopped in here, yeah, there is support here and multiple resistance lines coming up, but I know this bounce is going to be strong enough where I can at least get some profit, guys. So I'm up $10 a share on 10 shares. It's $100. But yeah, so these are the moving average lines that I use, and now that's pretty much show you how I add them. It's very simple. You just go to studies. As that loads in, you can either go to edit or add. I always click edit because it's always a little easier. And then you just go to moving average. You type it in, you put it in, and then how you change it is you go to the setting tabs, and then you scroll down, or no, don't scroll down, sorry. You go to length right here, and then put in 9 or however many, whatever you want. I do 9, 20, 90, and 200. So pretty much these are just support or resistant points for day trading or swing trading. I mostly use moving average lines for day trades and swing trades, and then the RSI for swing trades, and then volume obviously for both, but more towards day trading, guys. So I hope you guys enjoyed that video, and if you did, please drop a huge subscriber. Trying to hit our subscriber goal of 500, and I'm so thankful for all of my subscribers, guys. So this is pretty much how to use moving average lines to make trades, and kind of my indicators that I use. So I hope you guys enjoyed this video. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week, guys. And let's start Monday off killing it and making some profit. Take care.